Hey everybody, this is Jim at SP500chart.com. It's after the close, about 4:20 on May 22nd, 2013. We're going to use some time-honored techniques to try to understand these funky modern markets. I need to put that word in there. Funky modern markets, featuring daily technical analysis videos of the S&P 500 index. Before we get started, I need to remind you, as always, that the website and the video are for educational purposes only, and nothing stated at the site or in this video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional, just a guy that draws lines on charts. So we actually have an interesting day today, and it's interesting for a couple of reasons. For one, while we have been since the middle of April just kind of moving steadily up inside this green channel, this morning the market opened back over the top of that red line. Remember what we were talking about the past number of weeks, if not even for the past few months. We've been talking about this red line, that it should give resistance. And the market, the S&P, opened up over that red line. But remember, this was a rising resistance line. When you break a rising resistance line, sadly, you can't count on it to do much in the way of support if the market turns against you. So it's exactly what happened. We got up over this red line, even peaked up over our green channel line, and then got a little bounce on the red, but then started taking out some support. And let's take a closer look so we can get a little bit clearer idea what happened. To begin with, there we are over the green line, came down to this rising resistance line, bounced up, but then took it out. Got a momentarily stopped, briefly on our little gray line here. And remember, we were saying that if this gray line goes, look for at least a good solid test of our lower green support line. We got that test and it failed, but I need to remind you that only failed by a margin of about a little bit more than 6 points, which where we are at 1650, 6 points is not really a technically significant amount. So I'm coming in to tomorrow's session open-minded. And I'm open-minded of the possibility that what we saw happen late today was sort of the opposite and equal reaction to what we saw happen earlier this morning. In other words, we broke out over the top of this channel, and then we broke down below it. So I'm not ruling out that the S&P could get its way back inside this channel. We've seen this kind of thing happen more than one time since we've been doing this. Now, if that doesn't happen, then we have a blue support line that's drawn over this series of bottoms that took place in early May. If that gives way, then the next thing that could catch us would be down in the mid 16 teens, or depending upon how long that move might take, it could be the 1620s. So, in other words, I'm giving this a shot at saying, wait a minute, we just got underneath this line because we got a little too above it up here. Though I will have to say, getting over a rising resistance line, blowing out over the top of that usually doesn't bring good things. So let's keep our eyes on it. The good news is we got a pretty tight range here. So if we get back over the green line, there's a chance that this could recover and get back in this channel and at least come back to back test our gray line right here, which we didn't really get much of a back test of that today. That's a possibility. Or we just keep selling down. We take this line out and come down to this yellow line, or we come down here and bounce, back test our green line, then head back down. So really we don't know exactly what's going to happen because we still don't have a clear and discrete pattern for us to rely upon. We may be getting that forming here. There's a possibility that we're seeing something form right now, and I'll give you a hint. This would be an important line in it, but it's not formed yet, so I'm not going to pretend that it has. So right now, the same rule that applied yesterday applies today. Consider every line that's above us as resistance. This one's questionable. And then consider these lines that are below us as support. So guys, clearly what we saw today was a willingness for the market to at least sell off in a short-term burst. If you look at the high today was 1687 and our low was 1649 and change. Think about that. It's a 38-point swing. That's a really about a 2.5% swing, isn't it? Maybe not quite that much. About 2.25% swing from today's high to today's low. So again, just to reiterate, this could get saved, could get back into our channel. If not, then look for a bounce on the blue line here, and if that doesn't happen, then I would say it's going to come on down to the 1620s or the mid-16 teens. Guys, that's your video for May 22nd, 2013. Thanks for watching, and thanks for your support.